Hey guys, Simon Bryson here, and I've been getting asked a question that is usually a very good question. And the question is, Tommy, should I be selling, holding, or buying more investments right now with the current market? And it's basically because, guys, right now, a lot of people are actually making money and they are nervous because basically the portfolio are up like maybe like 10 to 20%. And they're like, hey, should I buy more? Should I sell now? Like, what do I do? Well, in this video, I'm going to answer all those questions. And by the way, right now, I checked the market and basically my portfolio is down like to around like 0.76% or something like that, or 0.54%. And the answer is, does this make me want to sell my investments? The answer is obviously no. But to someone out there, it might be like a trigger to be like, hey, sell, 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 because the market right now is going to go down. So you might be nervous, but I'm going to answer all those questions in this video right here. And by the way, I post videos on this channel every single day, so make sure to also subscribe to the channel and hit the bell so you're notified every time I post a new video. And on top of that, also destroy the like button. Now, without further ado, guys, before I get started, I do have to tell you these three things before I tell you, should you be holding, buying, or selling. So the first thing is this, guys. Anything can happen when it comes to the overall market. Right now, my portfolio is up around 27%, but really, tomorrow my portfolio could be down 10%. And the answer is, you don't really know what's going to happen with the stock market short term, but you do know what's going to happen long term, because we have the math and the data that supports that, hey, every single downturn ends in a recovery. And that's the best thing about investing for the long run. Number two, whenever I invest, I never really invest whatsoever with any margins, meaning I don't borrow money to go out there and invest, because basically that puts extra stress when you don't really know exactly what's going to happen with the market. And next you know, you have to sell your investments to basically cover those margins that you basically put on your investments. And lastly, whenever it comes to investing, all you're really doing is putting money into a business. That's the entire idea. So whenever you're going to invest into a business, you ask yourself like, hey, is this a good business? Does it make money? What's the actual value? And then you put money into it. Investing in the stock market is not as easy as saying like, hey, you know what, today Nike is at $10 per share, so I'm gonna buy more because last week it was at $11 per share, so obviously it's going to go back up. That is not investing, that's called speculating, and that's very, very dangerous. Now that we covered that, I feel better, okay? Everybody knows where I'm at right now. We're on the same page. Let's talk about exactly, is right now the perfect time to sell or buy or hold? And to understand this, we need to understand exactly the type of investor you actually are. Are you a long-term investor or are you a short-term investor? Now, overall, according to the IRS, a long-term investor is someone that holds onto an investment for longer than 1 calendar year. However, if you trade it less than 1 calendar year, in reality, you are a short-term investor and you get taxed as ordinary income on your gains on your investments. If you hold on for more than 1 year, you get long-term capital gains tax, which basically is between 0 to 20%, which basically means you get to save a ton of money when it comes to taxes. However, according to Warren Buffett and also me, in a sense, right, I think that long-term investing is more like between 10 to 20 to 40 years and so on. If you're investing for like a year, that's not really like, oh my gosh, I'm a long-term investor, but I think like 10 to 20 to 40 years or so is actually long-term investing. But the only time as a long-term investor you want to basically sell is whenever the business fundamentally changes and then it doesn't make sense for you anymore and you basically want to sell. But as a short-term investor, you basically buy investments, make some quick money, and then call it a day, and then keep doing it over and over again, rinse and repeat, and hopefully you can actually make some money short-term. But that is very difficult because basically it's impossible to predict exactly what the market is going to do. Why? Because basically it goes based on emotion. If today they say, hey, Tommy, we just got news, the whole economy is going to open, unemployment actually went down, and on top of that, all the airlines are going to be operating just fine, the stock market will go ahead and rally and go up like crazy. If they say tomorrow, hey, we're actually not going to open up for at least like another 3 months, well, in reality, the stock market could sink down to the floor and you might not know what's going to happen. And that's why it's so hard to be a short-term investor. But as a long-term investor, you have a clear picture because you know exactly what the market did based on the data that we actually have in the past. So when it comes to the question, Tommy, should I buy, hold, or sell? Well, as a long-term investor, maybe right now you might be up 10%, 20%, and even 30% or so, right? But the answer is, if you are a long-term investor, the idea is you keep buying and also holding consecutively, and over time you will get the average return of the market. However, if you're picking stocks for the long term also, the idea is you always want to buy below your target price, and as long as you're actually buying below that, well, you keep buying. But if it actually goes over that, then you know for a fact you're actually spending way too much money on the stock, and you basically stop buying, and you basically just keep holding and holding and holding. Now, it will not be the last time you actually see the stock market go up like crazy, and it won't be the last time you actually see it go down like crazy, because in the market history, we see that it happens every now and then, and that is normal. The situation now is not normal, but the idea of the market going down and up is very, very normal. It's not strange whatsoever. So as a long-term investor myself, all I'm really going to be doing is buying more and also holding on for the long run, 10 to 40 years, okay? That is the overall outlook. And as things get more volatile when I'm actually older, I'll just add more bonds to my portfolio, and that way I can stop the volatility in a sense. And that is the entire idea. However, if you are a short-term investor and you're wondering, Tommy, do I buy, sell, or hold? The answer is, it depends based on your rules, okay? So for example, when I was doing short-term investing, when I was in college, very risky stuff, I actually had a rule. And my rule was basically, whatever investment I bought, I basically sold it if I lost more than 15%, or I basically sold it whenever I made more than 15%, 1-5. And the answer is that currently right now, if your thing is this, okay? Well, Tommy, right now I'm up 20%. Or maybe even 60%, or maybe even 110%. I've seen it. The answer is, according to you, do you want to hold on to that if it's a good investment and actually ride out the entire wave, or do you want to sell right now and cash in? So the idea is, as a short-term investor, your main question is, if I hold on, I'll make a lot of money, maybe, but also if you hold on and the market goes down and then you sell, in reality, you might lose a ton of money. So overall, that is why I'm not a short-term investor, because although right now, my portfolio is obviously negative, it's going down. Overall, my portfolio is still up around like 27%. So I'm not worried about anything. And especially when I'm holding for like 10 to 20 to 40 years, I'm not focused on one bad day or one good day. All I'm focused is on consistency and making sure I'm buying at a good price. Because again, you're just buying a piece of a business. So as a short-term investor, you're either buying more now, or you're either selling it right now because you don't know what's going to happen. So that's the answer, a very simple answer. But to get even more complicated, let's talk about number 2 here. And number 2 is all about target price. Now, Tommy, what are you talking about when you talk about target price? A target price is a price that you set for a stock that you actually want to buy it at. So hypothetically, guys, okay, not a real example whatsoever. Say, for example, I buy Delta stock. And my entire idea is this. Right now on Delta, I'm up around like 60% or so. All right. I'm not really worried because, again, I'm holding for the long term. But the idea is, although I'm up 60%, say, for example, my target price is around like $33.50. So the idea is, if I think that Delta is actually worth $33.50, guess what? I'm going to keep buying Delta as long as it's below that price. Once it goes beyond that price, I'm either selling it if I'm short term, or I'm either holding on to it if I'm actually long term. And that's what I'm doing right now. I'm always going to be holding. But the idea is, whenever it comes to buying a stock, you have to understand, A, what is your target price? How much you think the company is actually worth per share? You have to understand that. Number 2, what is the intrinsic value of the company? How much is the company actually worth if you calculate all of its assets, its liability, and also its long-term growth? However, although it sounds simple enough, actually calculating the target price for a company is actually not pretty like difficult. It's actually takes some skill here and there, but the idea is you need some accounting skill and also a little bit of finance skills to actually see the projections for the future. And if you don't know how to do that, I'll make a video on it. Comment down below and let me know if you want to see that, and I'll get to work on it very quickly. On top of it, if you're new to the channel, make sure to subscribe so you get notified when I actually post that video. However, if you want to read a full-blown book about intrinsic value, target prices, and also how to understand a company, there's a great book on it called The Intelligent Investor by Benjamin Graham. And if you want to take a full course on it for less than like $17, there's a great course on it. I'm taking it right now also. It's by Chris. And this course teaches you, for example, accounting, finance, and on top of that, the valuation of stocks. And I'm also taking courses all the time because basically I want to learn more, but I won't pay like $200 or $1,000 for a course. I just don't think it's worth it with all the free information that's out there in the market currently. But if you want that course, link down below. And the guy that actually made the course actually worked at Goldman Sachs, and on top of that, he also went to an Ivy League school, which basically means nothing, but the answer is he knows what he's doing. I'm taking the course right now, and I can tell you it's a pretty good course, and it also costs like 17 bucks. And if you don't like it, you can return it, and that's what I like to hear. Okay, returns if something is not good. So lastly, guys, the last thing I want to mention is this. Okay, if you are, for example, an index fund investor and you're wondering, hey, do I sell now, or do I buy more, or do I hold? The answer is ETFs, index funds, you know, the S&P 500 is usually for people that want to hold on to an investment for like 10 to 20 to 40 years. So the answer is always going to be hold on, keep buying, stay consistent, and that way you're good to go. And on top of that, let's look at an example right here, okay? 40 years ago, the S&P was at around 115 points. Today, it is at 3,232 points. So the answer is, whenever you are an index fund investor, what you want to basically get is a good return, the average return over a long period of time. So the more you invest during these periods, when the stock market is down, or overall, when you're actually younger, the answer is over time, as the market keeps growing and growing and growing and growing, you will have a bigger profit. That is the overall idea. And by the way, since then, okay, since 40 years ago, the S&P 500 has had a total return of around 2,416%. So if you ask me, that is pretty solid, and that's why I invest for the long term. So I'm not worried about, oh my gosh, like 0.15% is actually down. Oh my gosh, I'm going to go crazy. I'm going to sell everything. The answer is no. Long-term investors have nothing to worry about because obviously they're investing for the long run. Short-term investors have a lot to worry about because they don't know what's going to happen tomorrow, and they're basically trying to decide like, hey, I wonder what's going to happen. That's why I don't invest for short terms. I'm only investing for the long term, okay? But overall, guys, comment down below. Are you going to be selling today, or are you going to be holding on and buying more? Comment down below. Let me know. And by the way, right now, the stock market currently is still going down, okay? And the idea is it's a normal thing. It's going to go up, it's going to go down. And there's a lot of people right now that basically made a lot of money and basically are cashing in right now, which could also lead to the stock market also going down. So it all depends, okay? It's part of the game. But comment down below and let me know. And also comment down below and let me know, do you want to see a video on the target price of a company? Let me know and I'll get to work. And as always, if you enjoyed this video right here, guys, well, like this video. On top of that, also subscribe to the channel and hit the bell so you're notified every time I post a new video. On top of that, if you want to follow my second channel, well, link down below. Also, I post there every single day. Also, it's called The Tommy Bryson Show. You'll like it. It's hilarious. Also, follow me on Instagram, Tommy Bryson. And before I go, if you want to watch another video on the basics of investing, well, here it is right here. I'll see you guys tomorrow. Thanks for watching. And as always, peace.